speak more on this, I'm joined now by N S Venkatesh, the CEO of AMFI. Mr. Venkatesh, thank you so much for speaking with us. Let's first start on the SIP numbers. SIPs and the inflows of SIPs have been falling month-on-month basis, and even equity flows are at a 5-month low. What has led to this number in your view?
The SIP numbers had come down a little bit, marginally by around 500 crores. That is because of two things. One, for the month of March, the spillover from February had come in. And in April, there are intermittent holidays, as well as April 30th happened to be a Sunday. On the last day of that month, generally the SIPs are bunched together. So I think these are the two reasons. But we believe that from May onwards, you will see the 14,000 mark being reclimbed. And from there onwards, the upward trend will continue.
I want your word on debt funds. We saw a bit of pain in debt funds in the month of March on the back of post-budget decisions on, tax, etc. Do you see that now persisting?
The interest rates have peaked, so naturally this is the time where people can put in more money into the debt segment, especially the long duration segment, and get the benefit of the higher yield as well as the capital appreciation which could happen. Though the capital gains taxation has been taken away for the debt segment, but on a post-tax yield, the debt segment will do well compared to the bank fixed deposits. So I personally believe that more money will come into the debt segment.
All right, thank you for that, Mr. Venkatesh. I'm also joined now by Sunil Subramaniam, MD and CEO of Sundaram Mutual. Thank you so much, Mr. Subramaniam, for joining us this evening on the show. What do you make of the numbers in April? There is definitely a dip. Do you agree with that take, that it's more to do in a month full of holidays? There were a lot of bank holidays, etc., and that may have also hit it? Or is there a sentiment change that you're also seeing?
I think I agree with Mr. Venkatesh on the fact that this is an odd month because of the holidays. Also, please remember that March saw unusual action in the last 4 days, right? So there was a flow into debt funds because of the grandfathering of the tax. So some amount equity funds also would have seen some kind of a thing. So I think that this month's number have to be looked at in two perspectives. One is that I think March was the end of a long period of FIIs selling. Starting from December 15th, FIIs have been dumping India, right? Because started with the Adani factor, then the Silicon Valley Bank and the Credit Suisse factor. And then from, I think, towards the end of March, FII flows started coming in. But domestically, there was a concern that were the valuations too high. I think this spilled over to April in terms of the flows. So that's why if you see large caps probably didn't see, it was very flattish month. But the second point here I would like to stress is now FIIs have come back, right? So I think market sentiment reads into what the FIIs are doing. So I think May will see a sharp bounce back because FIIs have brought in complete, like we had 20,000 crores plus into April, number one. Number two, as the news of the Fed fighting the battle against inflation succeeding to some extent comes in, you will see again FII flows coming in. But what this means is that the rate cut cycle, when it starts in the US, right, it means that there's a slowdown coming. So what happens with domestic advisors, right, distributors and advisors, is that when they sense this, they tend to move into small and mid cap stocks versus large cap stocks. So if you see the month-on-month inflow, you've seen a slight uptick in the mid cap and the small cap segment. So that's a clear indication that advisors are directing their clients to get into more domestic industrials, domestic sensitive stocks as a allocation. So there is some amount of reallocation from large caps into mid and small, which are more domestic oriented and a broad-based allocation. That's one trend. The second trend is that you got to look at it in the context of the fact that Indian economic news is good, right? So investor sentiment towards the equity market, I don't think has suffered. But what is happening is just a reallocation. On the debt segment, right, I think one of the key things to bear in mind is that the bounce back in liquid is a normal yearly phenomenon because when March end comes through, a lot of institutions, banks especially, don't like to display the mutual fund investments on their balance sheet as of 31st March. So they tend to temporarily pull their money out of mutual funds and park it elsewhere. That's number one. The institutions also, because banks are chasing deposits in the month of March, banks tend to offer higher rates for big value deposits to tide over their credit deposit ratio in the month of March. That's another thing which drives in the month of March a drop in liquid. So this time in April, there's a bounce back because naturally people feel that mutual funds will give them better returns than their investment in the bank. So this bounce back in the debt and liquid segment is a consequence of the usual year-end coming back of equilibrium flows into the mutual fund industry. So nothing unusual about that.
Okay, so nothing unusual about April, but what is your outlook looking like? Because we've seen a really hot streak as far as mutual fund participation is concerned for over 20 months now. Do you think that that appetite still exists, or are there concerns it might wane?
I don't think there are concerns. See, if you look at the March numbers, there was a bit of concern around India valuations and the FIs were pulling out. But the strong bounce back in April of the stock market will reinforce the confidence of the domestic investor in the stock market. So I think what has happened is that with the FIs coming back in April, I think the confidence and hence May onwards, I would see a bounce back in equity flows back up to that. So as you mentioned, 20 continuous months, a little bit of a drop in a particular month is acceptable. But I think the two trends I see, strong inflows continuing into equities, number one. Number two, a reallocation within equities away from large caps into mid and small cap, which essentially reflects away from international oriented sectors like IT, pharma, cyclicals, global cyclicals, into domestic oriented sectors like banking, like industrials and capital goods, the like.
All right. Thank you so much, Sunil Subramaniam, there with all the details.